We are. We're live.
All right, everybody, welcome back to the Friday Stack. We are here with Bitcoin news, of course, 21 rates, and our special guest today, Adrian. We are going through a Mount Rushmore of Bitcoin treasury companies, a survival draft. If you had $1,000, where would you put your last money in these Bitcoin treasury companies? We're going to be talking the big banking news, everything from Bank of America, MSCI, trying to delist strategy. What is going on here? We've got a big show today. We've got 21,000 sats given away, Bitcoiner of the week, spinning the wheel, lots of good stuff going on. Thank you, everybody, for joining us. Gentlemen, how are you doing this Friday?
Feeling good. Crazy last few weeks here of the news that we'll get into, so I won't steal our own thunder here, but it's Friday. Can't complain.
Yeah, I'm doing well. It's Friday. It definitely has been a very eventful, I would say, last month more than the last few weeks. But yeah, lots been going on, a lot to talk about. So I'm interested to see where this conversation goes.
Yeah, good morning. I think so. We're seeing this week, you never know what's going to happen. People think it's going to take off in the banana zone. You see, a decent Powell speech. People feel like there's a soft indication of QE coming in. They're going to be buying up assets. We're going to see some liquidity in the system, and then Oracle completely shits the bed, and they feel like the bubble has popped. And then we come in later and we see like a good, rise yesterday, and then another dump this morning. So guys, watch your leverage, watch what you're doing, just stack sats. We're going to, set you up with a Lightning wallet, and we're going to send you sats if you win the giveaway today, but just caution and be very careful in these times.
Absolutely. Before we get into today's game, the Mount Rushmore, the draft, why don't we show people what we got going on over on 21rates.com/stack so they can participate in this competition. Let's show them how they can be a part of the squad.
You got that, Jodes?
Yeah, we're rocking.
Dope. There it is. Beautiful.
Yeah, you pop it up, 21rates.com/stack. Also go to the QR code. You're going to enter in a passcode. We're doing it easy this week. It's been a rough week, as we talked about. It's been whiplash. So the passcode today is Treasury. So capital T, REASURY. We'll also put it in the title below. Obviously, we need to make space for Adrian at the moment, but Treasury is the passcode. Come in. We're going to spin a wheel at the end and give away some sats. People could use a little stimmy right now.
There we go. Yeah. So super simple. Again, today's code is Treasury. We should pop that up on the screen throughout. But again, the website is 21rates.com/stack. Join on in. You can win 21,000 sats just for watching the show. All right. Cool. Boom. Live entries. 89K on the ticker. Let's get it going. Should we bring up the Mount Rushmore?
Yeah, let's do it. As I bring that up, you want to explain the game real quick?
Absolutely. So each week we like to do this little thing called Mount Rushmore, where we have a draft, a snake draft, where we get to go through and select which is the best pick of today's subject, which is Bitcoin treasury companies. We're each going to create a model portfolio of our favorite Bitcoin treasury companies. Where would we invest our last $1,000? I know Adrian is a strictly MSTR kind of guy over here, so hopefully he can give us some color to our different picks. We got a lineup of Avi, Jody, Adrian, Rob. We're each going to pick our top 4 companies that we want to create a model portfolio of Bitcoin treasury companies out of. So, boys,
let's rock. I will not pick strategy, and Jody don't either. So Adrian can the NBA draft where Patrick Ewing goes first. We'll give Adrian the strategy pick. I will go with, and again, to Adrian's point, I'm realistically in the same boat. I also do hold MetaPlanet though, so I will explain why I do like MetaPlanet. So we call it like the Asian MicroStrategy, if you will. I think they've got about 31, right under 31,000 Bitcoin. Really accumulated. We were just updating our treasury on 21 rates, and I was like, damn, like MetaPlanet's really started to go. And They're talking about doing preferred. And Adrian, you could add some more color to this at the end here, but I believe what Saylor said, he's like, I'll give you a year, to do it in Japan, and then eventually maybe we'll come over as well. But one thing that like really attracted me initially, and I heard about them first at Strategy World, but the fact that like number one, from a tax perspective, right now in Japan, it's 55% to actually, if you want to sell your Bitcoin versus just capital gains tax. So a lot of money initially came in through that. They were also the first one. They do have one hotel, so they're not really an operating company, if you will, from a treasury perspective, but that was their original business. And then they became this treasury company. So accumulating pretty rapidly for a small team. We met a lot of the team so far. But a lot of Westerners, I think, ignore the Tokyo Stock Exchange overall. You're getting MSTR style leverage with the cheapest fiat currency in the world right now. Like US companies are paying 6 to 8% sometimes on debt. MetaPlanet's literally paying pennies. So that, like the money glitch that people always talk about, MetaPlanet's got that. They have a very smart team. He was at Goldman Sachs. The founder was at Goldman Sachs, Simon, for several years, and fantastic team overall. So if I cannot pick strategy, I'm going to go with the Asian MicroStrategy and go with MetaPlanet.
Dope. Let's get it up there. Let's get it up on the chart. Good choice. I mean, it is really impressive that they could go from being a budget hotel company to amassing 30,000 Bitcoin in just over a year plus now, right? So, yeah, and it is funny that Saylor sort of, whenever he's talking about competitors in this space, it does seem as if MetaPlanet is on his list of companies that have a shot of really coming close to anything that he's accumulated. So solid choice.
I'm looking how to fix this here real quick. So keep going. I'll add them as we get this going.
Yeah, perfect. All right, so I'll go next. I'll leave strategy aside for a second. I think Adrian can weigh in on it perfectly. What I'm actually going to do is talk about what British Hodl said on the stream yesterday. We had a stream with British Hodl, MC Christina, always two great people to talk with. They got their own personalities. They, have been through the ups and downs. One thing that he said, he's someone that only invests in strategy right now. He thinks they have just the risk-adjusted returns is the phrase that he wants to hammer in. Of everything else outside of strategy, just the risk profile is just so much higher. So for our audience, what he did here at Bitcoin Mena that was the most compelling for him to want to consider something other than strategy, or at least understand the case to be made, is percentage returns from here. Like, how can the actual growth profile and the return and the high upside, if you are going to take a risk from this day forward into the future, what companies can do that? So that is actually something very similar to what we talked about with Matt Cole at the Cantor Fitzgerald conference and in person. So I'm going to go with Strive, ASST. I think that Matt made a good point of, if you're going to choose the second one, I think Strive is someone that's already launched preferreds. They have SATA. There's, we do talk about it's only going to be one winner per market, but I think it's just US is unique enough where you don't have to be strategy to also just do well and perform well and outperform other stocks. I think is a really good lesson for me that you don't have to be Google search to win. If you're Bing has always been a very good, profitable business for Microsoft. It's not a bad business to be in. I could be very wrong if something has changed in the last 2 to 3 years, but 5 years ago when I first had this conversation with someone, we went through, Bing is actually still a very good thing for Microsoft or business to pursue. So I think Strive, while they are beaten up, it's down at, I think, 90 cents. I think if it returns to somewhat, half of what it was before, it got up to $10 in May, then it's a very good risk-adjusted return. We'll see though. Bet small, look at your whole portfolio. This is not financial advice.
Getting that out there.
All right, throw Strive up on that list, Avi.
Yep.
Adrian, to you.
So this is my first time doing this. I just want to make sure I understand the rules. I see there's 4 slots. Are we going to go 1 through 3, 4? I'm assuming. So
Yes.
can I give all four, or do I have to
Yep.
just give one at a time?
No, you got to give
You
one at a
could
time.
you can give one at a time, but then we'll allow you to do the preferreds if you want to stick in the strategy.
I
theme here.
could, but so there's a reason why. There are many reasons why I would pick strategy, and let's just kind of think them through in terms of the overall investment thesis. Right now, people can think about strategy in terms of outperformance going forward. Sure, I also think about it in terms of optionality. The strategy options market on average is anywhere between 80 to 85 billion dollars on daily of open interest. So what that shows is that you have an options market that sometimes rivals, if not always rivals, the size of the company's market cap. That means it's robust. That means it's liquid. That means there's a lot of interested players playing both sides. Holding strategy allows me to play the options market, and then that's something that I do to bring in additional returns and yield. That's one of the main reasons why I have held my primary strategy position that I've held for the longest period of time now, going on 2.5 years, and I haven't moved from it. Now I've traded in and out of it since then on dips and returns above 300. So I bought under when I was under 295 months back, and I sold at 350. But I still have my primary position that I play the options market on. So that's one of the main reasons why I hold the equity. In addition to the fact that I think going forward it will outperform a lot of other equities, there's also the preferreds that we can get into later on. But from my perspective, in terms of if I had $1,000 and I had to put it into one of the Bitcoin treasuries, I would choose strategy because it will allow me to add to playing the options market. Obviously, you can't play the options market with only $1,000, but from my perspective, that'll be adding to the position, and it'll just be something that I do in terms of generating yield and looking for returns going forward. It is a long-term hold for me for that, one of those primary reasons, just because of the options market, which I was initially against. But if I'm thinking about it as a long-term hold, I'm thinking about it in a way to generate yield, I'm thinking about it in a way to have overall outperformance, it'll have to be strategy.
Of course, logical pick. The
Can't go wrong.
King Kong in the room, way more Bitcoin than probably any of these companies will be ever able to even sniff at, right? 660,000, 3% plus of the total Bitcoin supply locked up in strategy. And Adrian, I want to get your opinion on the $1.4 billion cash pile that they just raised. Do you think that that quells all questions about their all the FUD that was being raised over the last couple of weeks about them not being able to pay the dividends and all that?
Well, it should, but I don't think it will. And I'll give the reasons why it should. The USD Treasury, some people think of it as undermining the Bitcoin thesis. I think of it as underwriting it, right? So right now they have the preferreds. They have about 21 months or so of dividends that they'll be able to pay out going forward. So even if we see a bear market, even if we see a prolonged downturn, they'll still be able to pay that. And they've kind of set that aside. They've earmarked that capital for that. They'll be adding to it going forward. I think this is something that they should have done in the past already, regardless of having the preferreds. They should have been building out a cash position. But now that they are kind of adapting and they're growing with this model and they're kind of building it out as they go along, I think this USD reserve is a very, very smart move. The ability to pay the preferred dividends is huge because the preferreds will be a confidence game. People think that just offering the preferreds and having the dividend and being able to do all kinds of different financial engineering will be sufficient. I don't think so. I think that the ability to pay the dividend going forward is going to be huge. I think that will build confidence around the preferred equities, and that will allow them to scale and have more interest going forward. But they need to reach steady state, and I think that's what this USD reserve is doing. So it should. That's how it does address. Why I don't think it will is for everyone is because you still have the common talking points. Well, they issued equity to be able to do it. Some people think of it as they're robbing Peter to pay for Paul. Some people just don't like what strategy is doing, and nothing that strategy does will assuage those individuals. So I just think it's going to be a persistent talking point going forward that people are going to FUD it, people are going to disparage it, but functionally, the preferreds are largely a confidence game going forward, be able to scale it. Any point in the next 18 to 24 months where strategy doesn't pay the preferreds, or would have hypothetically been a position where they couldn't have paid it, which wasn't likely anyway. But let's say that was the case, that would have been extraordinarily harmful to the overall thesis around the preferreds. Being able to set this aside and say that they have the capital set aside for almost 2 years, being able to say that now we do not and will not sell Bitcoin to pay the preferred dividends in that case, and being able to say that we now have 18 to 24 months to get to steady state on the preferreds, I think is a very, very profound move, and I think it was very wise on their part.
Yeah, it was a big move, and it definitely it answered a lot of questions and raised some questions too at the same time. But I think in terms of shoring up the balance sheet and making sure that people don't get scared about the dividend payments, it did a great deal there. So yeah, I mean, strategy as a pick obviously had to be taken in the first round. And as somebody who knows the company so well, I'm glad Adrian was able to scoop it. All right, my turn. I will go with the new kid on the block, 21, XXI, Jack Mallers, Paulo from Tether, Cantor Fitzgerald, SoftBank. I mean, you've got titans from Asia to Europe to America. I mean, these guys are coming in there. And I mean, Jack has been very clear in saying that they're not your average Bitcoin treasury company. They're going to be offering financial products. What they're going to offer is still a little bit unclear, but they just had their big listing this week on the New York Stock Exchange. Jack was there to ring the bell. People were very excited, and they've got 43,514 Bitcoin, right? That means they're number 3 on the list, and that is about what, 6 times the amount of Bitcoin that Strive has, and 50% more than MetaPlanet. So I was able to get a big boy up here on the list, picking at number 4. Would love to hear the panel here's opinion on 21, this big week for them, and what do you think they're actually going to be doing with all that Bitcoin?
I can jump in real quick. So when we were down in Miami at the Cantor Fitzgerald, it was funny because Jack's always got a pretty, flamboyant personality. He's out there. He's pretty funny. And there was a Bitcoin Treasury or a DAT, roundtable. And the first question, he's like, "What the fuck's a DAT? Like, what is this?" And so it was a good, starting point for what he was alluding to. And I don't think they've shared like their whole game plan necessarily. But what we're starting to see is the companies that are just holding Bitcoin that have literally no operational behind them, or they're not a strategy where they have such a big lead that they have all that optionality. I think for me, on a personal level, like I like the fact that there is additional ways to create yield, right? So I'd like to see what those are before I start putting a lot of money into 21. But with those big boys that are backing it behind it, I think Jack does a great job of, for the new generation, orange pilling, the normies out there in the world. And so, I'd like to see their game plan. We talked to Reserve One, who's also doing something, similar. They're going to be buying Bitcoin plus other assets, plus having like a VC arm as well. And so it'll be interesting to see how these all play out ultimately. But I think from an investor standpoint, the old question of like, why not just buy Bitcoin? I think strategy has an answer for that. A lot of these companies don't necessarily have an answer for that. But 21 is making some promises that they will find other ways to create additional yield. And so for me, it's a wait and see and kind of, ultimately see what they're going to be doing with that extra money and what they're going to be building. But definitely something to watch. I mean, anytime someone has that backing, there are ways to continue to grow pretty quickly and make he's on CNBC like every day now. It's been pretty wild. So good pick. I think it's a good pick.
Throw it up there.
Yeah, that's my job. You're going back to back here, dude.
Back, Rob.
Yeah, I am back to back. Okay, then I'm going to do it a little different here, and I'm going to take CleanSpark. I'm going to take CleanSpark off the table. This is, of course, a Bitcoin miner. They've got 13,054 Bitcoin, a stack not to scoff at. Of course, they can acquire Bitcoin at production costs, right? They have acquired these electricity contracts in the state of Georgia and Tennessee to get dirt cheap electricity. I like the company. They help build up communities in which they are based. They're also, of course, just getting started with the AI play. They know how to build data centers, and now they are going to start building out the high capacity compute that is so needed for this AI revolution that we are witnessing. So CleanSpark is a electricity play, an infrastructure play, a Bitcoin play, and AI. I like the team, and I think that they're my sleeper pick for round 2.
We're gonna put the ticker signal in there.
Yeah, I was gonna say CleanSpark's too small to read. That's a good one and smart. I think going to the more mining versus Treasury play only. Adrian, back to you.
I didn't realize that miners were on the table. I thought it was just Treasury companies.
Oh, that's a good question. I guess what's your quick take on how you define them?
Well, so I've been in Bitcoin miners for quite some time. Last year, I did a lot of work covering them. So the 2 that I've held for the longest, well, I held 3 for the longest period of time, which were TeraWolf, Iron, and Cypher.
Yeah.
And was last year, the whole thesis was that these are going to be companies that pivoted into HPC AI. So the thing with it is that, and this may upset people or people may disagree, Iron, TeraWolf, Cypher, Hive, a lot of these Bitcoin miners, they're not Bitcoin miner plays anymore. They're not Bitcoin plays anymore. The outperformance they've seen this year has been because of HPC and AI. So you have to almost classify them separately, in my view, and because that has been the whole thesis that I invested in them starting last year, in February last year. So I never saw them as Bitcoin miners because I've never been bullish on Bitcoin mining, and I'm still not. I think that the overall thesis for them was that they could pivot into HPC AI, and that's what we're seeing. So that aside, I could add a few there, sure, but I'll just stick with the overall Bitcoin, like the focused Bitcoin treasury company thesis here, and I'll pick, even though it's still strategy adjacent, I'll say Stretch. That's solely because if you're thinking about it in terms of what can I do with my last $1,000, I'll put into something that gives me a dividend. I think makes sense. I invested in Stretch around the IPO when it quote unquote depegged and dropped down to whatever it was, 96, 97 recently, or in lower. I bought Stretch and it's now back up. And the reason why I did that is because I think strategy is highly incentivized, 1, to maintain that peg, and 2, I think Stretch is, I'm not going to use the terminology of iPhone moment, but to me, that is a dividend play that is adjacent to MicroStrategy that is backed by Bitcoin. I think from my personal standpoint, if I'm looking at a long-term investment, putting $1,000 in Stretch, getting the dividend, maybe even doing drip on the dividend back into Stretch makes sense.
And that was his big pitch this week in Abu Dhabi, right? Going from Bitcoin digital capital to digital credit, and saying that this is the yield you cannot find anywhere else. And does that, in terms of the depegging that we've seen in the last couple of weeks, do you think that will be taken care of in the future, or is that going to be something that happens periodically for Stretch?
It's going to happen periodically for all the preferreds, just because they're not at steady state yet. I personally don't think they're going to hit steady state for at least 18 months to 2 years, which is probably why strategy chose to, and this is just my spitballing, I'm not saying that I know anything definitively, I think they chose to have a USD reserve for that time frame because they're likely thinking by that point, 18 to 24 months from now, we're heading into the next halving, we're heading into probably a different macro environment. They need to be steady state by then. And I think that was what informed the USD reserve. The breakdown from 100, they really want us to be between 99 and 101. That is the price range that they want. Anything below that, you can consider it relatively of a depegging. But I think that's going to be par for the course just because of the nature of what Stretch is. It is a brand new preferred. It is a brand new kind of offering. It is a preferred offering that is backed by Bitcoin, that's fundamentally new. There are preferred offerings in the in the overall market. Yes, they're few and far between, but Stretch, Strike, Strife, they're all, and now Stream, they're all fundamentally different in terms of the fact that they are Bitcoin adjacent. And I think that the market is going to take a while to sanitize that and kind of make sense of that. So I think that that's going to be something going forward. However, I personally, not financial advice, would view those as buying opportunities. Now that the dividend has been, for the lack of a better term, guaranteed for the next 18 to 24 months, I think that it makes it a far more attractive buying opportunity. And there's some people that will drip Stretch to view as a savings account in that way. Some people will take the dividend and use it as income. There are pros and cons for either approach. I just think that if I'm looking to say, where can I put $1,000 and then kind of set and forget it, Stretch can be a good option.
Mm-hmm. I don't know if you saw the tweet. There's been a few people talking about this now, where they're creating their own little mini ETFs out of some of the preferreds, have a bit of MSTR, have a bit of Stretch, have a bit of STRK. You just rolled your eyes, or you did one of these. I don't know. What's that?
Yeah, mean? I mean, I've seen those posts. Do I think that there are people that are looking at the preferreds as arbitrage opportunities, right? They're saying that buy on the dips. Maybe some people I've even seen some people posting that you want to trade in and out of them, which I don't really see the benefit of, just me personally. Can someone do that? Sure. In the case of Stretch, if you're looking at it in terms of, I just want to grow my capital and kind of have a flywheel effect where I'm taking the dividend from Stretch and putting it back into Stretch and so on and so on and so forth. Sure. If you're just looking at it in terms of growing the capital, I did a post where I said, what does a drip for Stretch look like over the next 10 years? It's not a bad return if that's what you want to do. If it performs the way we think it's going to perform, or that we hope it'll perform, it'll certainly outperform a savings account. So these are all things that you can take into account. I think that Stretch and the different preferreds are going to find their own niches. They're going to find their own capital bases. They're going to find their own investor bases. I think that's what's going to solidify over the next 2 years. And you're going to see people doing a lot of different things with it. I even think, and this is something I suggested to certain Treasury companies, I won't say which one, that we can see companies taking positions in these preferred equities as well. So it is not to say that the overall kind of runway has been set with what these preferreds can do. I think there are going to be different people that find different use cases for them. I know a few high net worth individuals that are very interested in Stretch for the dividend, because they're looking for a way to park some capital but get the dividend off of it. There are all kinds of ways you can play these things. So I don't think there's any right or wrong way. I just think that they're going to get to steady state over the next 2 years, and we're going to see a lot of different things with them.
Yeah. So for next pick, first round went Strive, looking for the highest return from this point in time. Potential is high upside, also riskier. So with this, I think I want to balance it out with something less risky. Continuing off of Adrian with Stretch, I'm going to go with Strike, STRK. So STRK is what strategy calls structured Bitcoin. They have a 8% dividend paid quarterly. The difference in Strike and Stretch, or one of the differences, is that there is upside with the common stock, the MSTR common stock, where there's a convertible clause where you can get 0.1 shares of MSTR like reaches a certain price. So what I'm looking at there is like having participation in the upside. Let's say Bitcoin takes off in next month, there's a Santa rally, or this month and there's a Santa rally, or going into next year more likely, and people start loving the common again. You're still participating in that, but you're also making, I think, a good financial move by getting a quarterly dividend and not being fully allocated to the most risky and volatile option. So I'm going to go with STRK.
All right. Looping back. I'm just making sure my mic was on. So I had not heard about this company, but it is one of the most interesting. They're not kind of a well-known treasury company, but Prenetics. And I know Jody met Danny with me, the founder, when we were out in Hong Kong. But It's the Beckham Bitcoin bet. So Prenetics is like a healthcare company. They have about 387 Bitcoin. They're buying 1 Bitcoin per day. So you're not seeing these strategy, where they're buying hundreds, thousands of them, right? But what's crazy is their market cap's 115 and they have $120 million worth of Bitcoin and cash, right? So you're basically getting their revenue for free. And the operating company did $100 million this year. They're projected to do about 180 to 200 million in the operating for next year. As I mentioned, David Beckham's the co-founder, so it doesn't hurt to have a celebrity kind of talking, but it's one of the fastest growing healthcare companies, I think, in the world. And so if you're familiar with like AG1, it's very similar as Athletic Greens, and but it's a red drink, and it's actually very good. So we're not sponsored by them. I'm not getting paid to say this. It's actually like a really good drink. But you're basically getting paid to take on, a debt-free company, which is crazy. They're buying a Bitcoin a day, so it's not necessarily in the same stratosphere as some of these other guys. But if you like an operating company that is growing at 100% year on year right now to date, I don't know. It's kind of an unknown mini monster, if you will. It's priced as if they're burning all their cash and going to zero, but they're doing 100 million ARR. It's like a Bitcoin accumulation machine, and over time, I think the revenue going double next year. And if they continue to scale at that, and they're buying Bitcoin, that's a company that definitely interests me. They just got investments from like Kraken, Exodus, and Jihan Wu, who's the BitDeer founder. So kind of an underrated one. The ticker is PRE, so I'll throw that up here in a second. But kind of a sleeper pick, if you will.
Are they Bitcoin true believers?
New to it. So they're a Bitcoin. Yeah, I mean, they are buying a Bitcoin a day. I wouldn't say they're like a Michael Saylor out there, and that's the premise of their company by any means. But I'm a guy that likes a company that does produce cash to allow them to buy Bitcoin. It's a healthy business. Plus, you're getting the Bitcoin on top of that, and you're basically getting their 100 million revenue for free, and it's going to go to 180 to 200 million next year. Definitely a stock to watch. I used to do Pounding the Table podcast, and we did this thing called Mini Monsters, and so a little throwback for anyone that used to watch us on that show. But I think that's my mini monster is PRE, ticker symbol.
I will say, yeah, to Rob's question, the founder, Danny's a fun guy, and he did go to like Bitcoin Asia in Hong Kong. So, just to like go and talk with people. And I don't think he didn't have like a speaking spot. So I don't think they're trying to go full leverage Bitcoin equity, and they're probably not launching preferred. So they're definitely focused on the operating business. But I think he's a true Bitcoin believer himself.
Yeah.
And so how much he injects it into the business will remain to be seen.
And have you tried the drink?
Yes.
Yeah.
It's
Jody
good.
actually stole mine. He gave us 2 boxes, and stole is a strong word. I forgot them in his bag, and he took them home with him. But it actually was really good. I mean, especially at those conferences when you're like extremely wiped out, you're talking to everyone, you go to bed, at midnight, you wake up again at 7 a.m. Like it did actually really help. So not a paid advertisement for them, but the drink was good.
There you go.
We should get them as an advertiser. So
you're double picking, bro.
Yeah.
Oh shit. Let's see what else I'd go with. I found one that was another. Oh, I want to say Open Door, but they haven't bought it. They're now accepting it. But a similar style, Boyaa Interactive. They're not a ton of Bitcoin right now, but they are another operating company that you're basically buying their gaming business for free. So they did about 63 million. So another small cap here, 63 million, growing about 15% per year. So it's not massive, but they have started to accumulate quite a bit, and their profit margins are incredible. In gaming, once you have a hit, you can make incredible profits. So they had 654% year-on-year growth on their profit, and they are generating $60 million a year selling virtual poker chips is their main thing, and 120 million of pure profit, and they're holding 4,091 Bitcoin today. And so that is Boyaa Interactive out of Hong Kong. So I'm going with this whole Asian theme today.
Yeah, you got dude. You're just sweeping. Your last one better be Asian too.
Yeah.
Keep the theme.
All right, so round 3, I'm going to speed it up. We're 33 minutes in, so we'll start talking fast. So what I'm going to go with is a little bit different on the geography side of one winner per market. I'm going to go with Arcadia BTC. So we had Boyd Cohen on, Mexican-based treasury company. I don't believe public yet and tradable in the US. But what I think is very interesting is if you talk about 21, you talk about what they're doing with financial services in Bitcoin, built on Bitcoin lending. You know, they're doing card, you know, using it basically, they've even said as a bank account. Arcadia is actually just as far along, I think, in the side of building out some of those offerings. It's smaller than Strike, but they have a card in Mexico. They have an exchange in Mexico. They have lending. These are all cash flow positive business lines that I think as we look at this chapter of treasury companies, it's not all about leverage. I think people are looking through what's going to make the bear market, who's going to be able to continue to produce cash. And as we know, exchanges make money on the way up and the way down. So Arcadia BTC, Mexican Bitcoin treasury company, I think is going to be the third pick for me. And back to Adrian.
I'm going to be boring and stick in the strategy ecosystem economy / and I'm going to say Stride, solely because they got hammered in recent weeks and months, especially in the downturn. I think that, you know, as I'm sure you guys are aware, people have called that like the junk bond version of the preferreds. There's a lot more upside in Stride than Stretch. Obviously, Stretch is designed for upside. Stretch is designed for like a stable return, while Stride definitely has more upside, more volatility. I think that in terms of, I don't like to say risk adjusted. I just like to say in terms of where does it make sense for me to put money going forward in terms of what the market is likely doing. I think Stride makes sense because especially if 2026 turns out to be a year where Bitcoin doesn't cooperate and all of these equities are somewhat depressed, I think having the ability to get that dividend, as I mentioned, because of the USD reserve has guaranteed those dividends, I think having your money parked in something that's paying you a dividend makes sense. And in terms of you know, it dropping below certain price levels, as I mentioned, I think that's going to be par for the course in the next going on the next 2 years. So assuming that and understanding that, having the dividend, being able to just either reinvest that dividend or take the dividend out and use it in for living expenses or what have you, I think makes sense, especially in a potential for a market downturn.
My question to you is, is the goal for these preferreds to be the Bitcoin accumulators and they won't have to sell the common again, hopefully in a year or two from now?
I think that's the general idea. They want to be able to use equity raises on the preferreds to buy Bitcoin. However, I'm a person, and this is where I'm going to go against the grain. I think that using the common stock still makes the most sense for Bitcoin accumulation. And I say that for a few reasons. One, the common stock has traded over $1 trillion in volume this year and counting. So in terms of liquidity and in terms of the ability to be able to buy Bitcoin, it makes the most sense. Two, a lot of people say that dilution. I think you have to look at it in terms of a holistic approach. Some people just say dilution is bad just because it gets clicks. However, functionally, what are you getting for that dilution? That dilution has allowed them to accumulate over 660,000 Bitcoin. Because one way or another, even the preferreds are a result of that dilution. They would not have gotten to the scale in order to facilitate having preferreds if they had not been issuing common equity. So everything is downstream from the common equity, even the preferreds. The preferreds are going to reach steady state, but we have to be honest about how the preferreds are able to scale and how the preferreds are able to become possibility in the first place, right? So that's the second point. Third point, I've actually done statistical analysis on the common stock and on all the different variety of factors that are impacting the price. The ATM is less than 0.5% in terms of price variance impact. So people that like to say the ATM is impacting price, I often ask them, have you done any analysis on the data to prove that or disprove that? And the answer is always no. As someone that has a lot of capital in Bitcoin, as someone that has a lot of capital in strategy, I want to make sure that I'm doing it with as much of an informed position as possible. So I did a regression analysis on the data. I've done it all the way back to 2020 when they first initiated the Bitcoin Treasury. And I've done it going back to August of 2024 when we have the most robust options data. And I've looked at it along 17 features and 35 different data points. The ATM has not been driving price. It has not been impacting price. So that leads me to believe that, to answer your question more holistically, yes, the preferreds are intended to be the primary accumulation engine going forward. However, I think realistically, people need to be aware of the fact that from now until, even if the preferreds were to double or triple from here, they would not give a fraction of the purchasing power that the common equity would. And people need to be aware of that, I think, and have that in the back of their mind. So while it's the intention for them to do the preferred equities to buy the most Bitcoin, I think we've seen in recent weeks, one, with the USD reserve, and two, with the recent purchase, that the common equity is still the most powerful engine they have for Bitcoin accumulation.
I got a few questions. I just pulled up your tweet, and if you guys do not follow Adrian, he just got a great new handle. It's _Adrian, but definitely follow him because a lot of analysis there that's very interesting. So the MSCI stuff, I think, is, from a high level, a lot of people can understand what that means, but I'd love for you to just dive in very quickly what that can mean. Do you think it's already been priced in? MSTR has gone down quite a bit since its peak, obviously. So what negative catalyst could happen? MSCI being one of them.
We are going to go in MSCI after Mount Rushmore. So
we are. All right, we can save it then.
Let's not jump ahead.
I'm just giving him a little teaser and the audience a teaser then. And then the other question to start thinking about is, what are the optimistic catalysts there as well? So let me pop off that and go back to the game here. All right, Rob, last pick here. What are you going to go with? Round it up. And we're only going to do 3 rounds because we got a lot of news to cover.
Yeah, absolutely. So I'm going to go, again, off the beaten path a little bit and go with my boy, Jack Dorsey over at Block, ticker XYZ. One of the original Bitcoin treasury companies, one of the first ones ever to put Bitcoin on the balance sheet. They've got over 8,000 Bitcoin. They haven't been adding to that, but there's no company that's building out the Bitcoin ecosystem like them. They've got Cash App where you can buy Bitcoin directly on your phone. Then you can go spend your Bitcoin on a Square terminal. They just turned on 4 million merchants to the ability to accept Bitcoin at their mom and pop shops all across America. Of course, they've got Proto mining rig. They're building out mining rigs, and they've got BitKey, the hardware wallet for you to store your Bitcoin. So very few companies are doing as much for the Bitcoin ecosystem as Jack Dorsey and Block. I think they finally aligned all the incentives within their company. They're different companies, so they're all pointing in the same direction, and that really seems to be promoting Bitcoin adoption. So now Cash App and Square used to fight for internal resources within the company. Now they are aligned. You've got Cash App has a map to show you where the Square terminals are, so you can buy your Bitcoin on the Cash App, spend it on the Square terminal, and you can get points for doing so. So, I mean, there's all these cool things that are coming out, and it seems as if Jack Dorsey has really reinvigorated the company after being away from it, coming back, putting his full energy into it. And now it really seems as if they are going to push Bitcoin and Bitcoin adoption forward as a medium of exchange, as Jack Dorsey thinks is so important for Bitcoin in order to stay censorship resistant and a living, breathing money out there rather than just a store of value. So yes, I pick XYZ as my final.
Great pick, I think. Curious and I actually had the opportunity to interview the lesser known co-founder a while back, Jim McAlvey, who sits on the Fed board in St. Louis, and billionaire, genius guy. It was an incredible interview. This is like 2-3 years ago now at this point. But what's your gut say? Do you think they'll ever accumulate more, Rob, or do you think they're done and they're focused more on expanding the revenue side of their business elsewhere?
I think every company is essentially going to need to become a Bitcoin treasury company as time goes on. And so it behooves them to add to that stack. There are going to be multiple ways for them to accumulate Bitcoin. And so I think it just makes all the sense in the world that eventually they will acquire more and more Bitcoin.
Amazing. All right, let's take a quick pause to remind people, go to 21rates.com/stack. The code is here right now, Treasury with a capital T. And we're giving away 21,000 Bitcoin. And make sure you guys sign up. It's free to sign up.
way it works. And in the show, we'll spin a wheel. It's kind of fun just to watch a little animation, keep Avi happy, keep the focus in. And then what we want to encourage people to do is use Lightning. It's super easy compared to 5 years ago, 6 years ago. You can get Wallet of Satoshi, Rhino app. There's so many free wallets. Strike has, some good Lightning options. And we'll send you sats. It's really fast and easy. And I think it's a great way to start using Lightning, because then now you have a lot of Square terminals that you can go out and actually pay for, real life things with.
Yeah, it is easy. I even did it, and it was the first time, funny enough, and I'm humbled to say that, as a Bitcoiner, but did it the first time like 2-3 months ago. And I was like, oh, I should have been doing this the entire time. It's very, very easy to do. So I can even do it.
Cool. Well, before we leave Mount Rushmore, just one last thing. Could you bring it back up? So I think we'll declare Adrian the winner. I mean, you pick strategy. You obviously win the Treasury Mount Rushmore right there. But if you had to pick amongst the other 3 portfolios, give us your honest views on our selections, and which portfolio do you think of the 3 in total you would choose as second place?
I can't find it now. I think it deleted off. But I apologize.
Off of memory.
Yeah.
Well, so are you referring to the whole portfolio or a particular equity from a portfolio?
From the list that we chose, out of the 3 of us, who would you say had the best selections for this game?
Well, I can't remember who picked what with everything, but I would say that Strive and so I think one of you had Strive, the other one had MetaPlanet. I think it was Jody that had MetaPlanet. Strive.
Yeah,
and so I think those are decent picks. If you had to like twist my arm, I think MetaPlanet. Of course, the thesis with that is that it has exposure to the Japanese market. Whole different set of dynamics. They've been able to acquire Bitcoin very, very aggressively because they have market sentiment on their side. Now they're launching preferreds, and I'll be very, very curious to see how those are received in the Japanese markets. And I think that if they stay the course, I think they have a chance for success. But it's going to, I think, and this is, I'm not trying to sound bearish here. I think that what we're seeing right now is that Bitcoin is kind of going into a bit of a steady state. So those explosive growth curves are kind of a thing of the past. With that, the companies that are able to weather that storm, I think, are most positioned for success. I think MetaPlanet is positioned to weather that storm. I think, of course, Strategy is positioned, and I think Strive, because I'm a little bit biased. Ben Workman's there, Punter Jeff is there. I have a lot of insight into that company as well. I think that they are positioned. So it's really just going to be a matter of who did the best job going up until this point, and who was able to rest on their laurels. And I think that MetaPlanet has a good chance. I think Strive has a good chance. And we'll see how things play out.
Yeah. One thing we're seeing this week going into the next topic is never bet against political influence in this next, 2.5 years. As you see, Larry Ellison's calling up, the president and saying, hey, I don't like, Netflix's acquisition of Warner Brothers. So you need to look into that. And the fact that the president's talking about, this kind of like entertainment acquisition. We talked with Adrian Pruitt, Los Angeles Huddle. I know that Adrian knows as well. He was talking about that on Wednesday, and he's just like, this is, such a interesting time because it's such a monumental thing for entertainment, but now suddenly it's political. And so back to the point, MSCI, Vivek Ramaswamy is, the founder of Strive. Matt Cole's the CEO. He's going out and like saying something very public, putting out a statement saying this is, this index is not independent. And I'm going to save the good stuff for Adrian, because you've put out a lot of content this week that everyone should go check out at _Adrian. But would love if on your just general take on the MSCI TAC and where you think it stands today.
Well, so I don't know how far back you went, but I did a post that got me to Yahoo Finance and Bitcoin Magazine on it.
Hold on.
So this is where I'm going to sound like a toxic Bitcoiner. So let me preface everything I'm about to say with that. The MSCI situation is clearly not an objective, or I would say fair-minded decision process that's been taking place. Solely because if you just take a look at what's going on, you have other companies that are in the in their index, that have over 50% in real estate, 50% in cash, 50% in all these other things. And now they're trying to arbitrarily say, if you have over 50% in digital assets, Bitcoin, whatever else, you should not be listed in the index because you're essentially operating as a fund. That doesn't really make sense. It doesn't even hold up against their own internal scrutiny, because if you take a look at the other companies that exist in their index right now, they are they funds as well? Are they REITs? Are they real estate funds? I just don't know what is motivating this outside of, very, very simply, they no longer want Bitcoin and digital asset treasuries represented in the index. They added MicroStrategy in May of 2024 without fanfare, without issue. Now, 18 months later, all of a sudden, this is an issue. And if you take a look at, you should look at the timeline that I put out. This really started with MetaPlanet and their giant raise. That's when MSCI put out their first notice about that they are consulting with the market with regards to how to handle digital asset treasuries. And I think it just kind of snowballed from there. In my mind, whoever's whispering in their ear may be telling them that this is a way that these companies are, quote unquote, if I had to take their side of it, gaming the system. They're using Bitcoin to swell their market cap, to swell their valuations, and to get into index that way. Some people have opinions on that. We're not going to get into that here. All I'm saying is strategies already existed in the index. MetaPlanet already existed in index. Delisting them at this point just seems arbitrary and capricious, and it seems retroactive. If you want to establish guidelines going forward and saying that, okay, going forward, we have new guidelines, and these are the guidelines we want to follow, I think it makes sense. But to arbitrarily then retroactively say we're going to delist these companies, and we're going to say going forward that we do not want companies that have more than 50% of their assets in Bitcoin or their valuation in Bitcoin, it just doesn't make a lot of sense. And others have pointed out that because of Bitcoin's nature, companies are going to go in and out of that threshold because of how volatile Bitcoin can be. So you're adding several layers of complexity in a way, in my view, that is just a veiled attempt to remove Bitcoin and digital assets from the index. I think that's what this is. And also, given the fact that you have a lot of these other banks like JP Morgan that are now coming out with Bitcoin offerings. You have Morgan Stanley themselves that are coming out with Bitcoin offerings. And people can tell me that MSCI and Morgan Stanley are separated. No, they're not. The CEO of MSCI right now, and two of the directors have combined over 75 years at Morgan Stanley. You do not maintain the relationship. You do not maintain the name MSCI in Morgan Stanley. So you don't keep the name, you don't keep the associations if you do not want to benefit from the institutional associations. There's no way that this is happening in a vacuum. I don't think this is all coincidence, and I think that there are definite political motivations on the back end that are driving a lot of this. So I could go into more detail on a lot of different things, but that's just my 1,000-foot view of what I think is motivating MSCI. And the fact that Strive has come out in defense, Bitwise has come out in defense, Strategy set out their own letter. I think this bodes well for the market itself, for the overall community, coming in and trying to say to them, this does not make sense. And each one is providing very, very nuanced and very, very structured arguments as to why it doesn't make sense.
Well, and the dates in January, they make the final decision. Is that right?
January 16th.
Yeah. Okay. 15th, 16th. So how much of you think that's priced in? MSTR has already been down quite a bit. Do you think it is priced in early on? Obviously, if they do take them off, that's money flowing out as well. But do you think that's, if it does happen, do you see another leg down here for MSTR?
No, I think that's been largely priced in. So a lot of the price action we've seen MSTR has to do with the fact that you had, JP Morgan Chase dumping their shares. You had the short attack by Chanos. You had a lot of market sentiment that was being pushed to change the view around the equity. And again, I already have a post about this. I'm not going to go into all that here. But what we're seeing from May to now is the net result of a lot of focused interest on driving the price down. There's been a lot of short interest. There's been a lot of negative sentiment. There's been a lot of FUD. And what we're seeing right now is the net result of that. I think MSCI is largely priced in. And now people talk about the 2.8 billion outflows. As I've shown in the post that you just showed, strategy is over $1 trillion in volume year to date. So I don't think that's going to move the needle. Okay. So now you have another figure that's being thrown out there. That's 8.8 billion. Well, what, in my view, JP Morgan was trying to do is they're trying to stoke fear about other indices delisting them. The Russell 1000, the NASDAQ, so on and so forth. That's where that number's coming from. So I don't think that's a near-term risk, really. I think that the focus is MSCI. So yes, I do think it's priced in. I think even if the delisting happens, not only is it priced in, but just with the sheer amount of volume that strategy sees as equity, I don't think it's really going to move the needle a lot. A lot of this is about perception, and I think the negative perception hit with regards to this has already taken place. I don't think that we're going to see yet another hit when they're delisted, or if they're delisted in January. Not saying it's impossible. I'm just saying that I don't think it's possible.
What positive, optimistic outlook besides the price of Bitcoin going higher? Like, what else do you see that of like optimistic catalysts for MSTR?
Well, really, as I've been trying to highlight to people, MSTR is not being driven by Bitcoin anymore. It's being driven by the options market. It's seeing a lot of competing flows in terms of people going into the ETF. It's seeing a lot of competing flows of people going into the Bitcoin miners because of the HPC AI play. There are a lot of things that have been driving it. So I can't say that there's going to be one catalyst, right? I think that we just need to have broad market cooperation. I think that one thing that the data has shown me is that on the downturn, so whenever there's a very, very strong downturn, strategy and Bitcoin tend to couple more tightly, while when there's broader market activity and Bitcoin is decoupling to the upside, then other things start to come into play. So if Bitcoin is in a prolonged downturn, I think the strategy is going to be in a prolonged downturn. If Bitcoin starts to decouple and we start to see other players coming in for different reasons in the options market, we see other pressures in terms of the ETFs, we see other pressures in terms of the Bitcoin miners because of the HPC AI play, all of those are going to coalesce into a factor. I just think that strategy right now needs to weather the storm. And the better it weathers the storm, with them not selling Bitcoin, with the preferreds maintaining their footing, I think that's the best path forward. And I can give more specifics, but I'm reticent to, just because there's so many unknowns in the market right now. All it takes is one tweet from our president to send things spiraling, right? Or all it needs is, and I think that what we see right now, what we have going on right now, is twofold. That October 10th liquidity event, I think we're still seeing the effects of that in the crypto market for sure, right? And then I think largely in the market overall, I think people want to see a crash. Because I've never, and this is granted, I was much younger in 2008 when that crash happened, and I was a teenager, early teens when the 2000s crash happened. So I'm kind of doing a look back here. This could be like a result of the social media era, but I've never in my life turned on the news so much and heard people talking about a crash over and over and over and over and over again every single day. It's really, really strange what's happening. I think that we have a battle of wants in the market. We have half the market that wants it to go higher and half the people that want it to crash. And all the volatility we're seeing is what's going on between those two. It is really, really wild. You have so many people calling AI a bubble, when objectively it does not match what we saw in the 2000s. It just doesn't. And one of the things that people are missing, and I'm sorry if we're going to go over time here, is that we've had something like $25 to $35 trillion of stimulus since 2000 to now. The floor of the market is much higher as the ceiling.
30% of the dollars I think I just saw was like the last 5 years ever printed.
That's the rough number that people say, right? And then we also have to take into account, if you take a look at the multiples versus the earnings, they haven't decoupled. In the 2000s, you had earnings here, but multiples were going stratospheric.
25, yeah.
In NVIDIA, its multiple is not blown out when it comes to earnings. Its PE multiple is not blown out. So I think that there are a lot of narratives that are taking place right now. And I believe, and I think that the evidence shows that markets move on sentiment. They move on, so it kind of goes sentiment, liquidity, fundamentals. That's the order. And I often tell people that liquidity creates capacity, fundamentals create the rationale, but sentiment creates the bid. So we have a fight that's going on between those three. And since the market is driven on the perception of all of those, the market's driven on the perception of the fundamentals. The market's driven on the perception of what can be done with the liquidity. We are just in a place right now where anyone that's saying, oh, I know what's going to happen in 2026, I don't know if that's really, really accurate. So that's why I don't know what catalyst is necessary for strategy to go to the upside, besides the fact that from a mechanistic standpoint, it's been getting hammered for so long that one of two things is going to happen. It's either going to break, and when I say break, I mean it's going to break to the downside, and we're talking sub 100, or it's going to rocket back up to 300. I don't see a middle ground where it's going to be just kind of chopping along. If I had to take a guess, that's the best way I can guess it. I don't think $500 or anything like that is in the cards. But if Bitcoin starts to cooperate, I think strategy can go back to the 300s. If we are in a position where Bitcoin can now start trending down and start hovering in the 80s, I think strategy is going to break down further, and all of the Bitcoin treasury is going to break down further as well.
Well, going back to your previous statement about like it decoupling from Bitcoin, then you just mentioned the downside. If Bitcoin, and the news we shared last week was with Charles Schwab allowing spot Bitcoins in 2026. Bank of America, even Vanguard now is going to start allowing people to buy Bitcoin, right? Not necessarily MSTR, but they, so if Bitcoin does have goes to 180, 200K next year, do you think that MSTR will follow, or it's more on the downside only that Bitcoin matters there?
Well, I don't think Bitcoin's going to do that next year.
Okay.
So I think, I don't know if you guys recall, we talked months ago. I said I think that the highest for this market was going to be like 150, is what I said.
Mm-hmm.
And I think we just missed 130, right? Now, this is not me being bearish. This is just me taking an objective view. The larger the market cap, the more money it's going to take to move Bitcoin's price higher. So that's one thing. We also have the fact that, yes, is liquidity coming into the market? Is QE essentially starting? Yes. But again, I've never been one that thinks that Bitcoin is moving necessarily with liquidity. I think Bitcoin's been moving in past years with stimulus. Mm-hmm. So are we heading into a liquidity environment, or are we heading into a stimulative environment? I don't think a liquidity-rich environment is a foregone conclusion that Bitcoin's going to run to 180. Do I think we can go back to 125, 130? Sure. Mm-hmm. Do I think we're going to see all-time highs necessarily in 2026? No. But that doesn't mean we're following a cycle either. I think, kind of like what I said with my Stairway to Heaven scenario, I think max pain is that we range between 80 to 120 for the next 2 years. Mm-hmm. And then we break out, and then we range, and then we break out. We kind of stair-step our way up to $1 million over the next 10 to 15 years. I think that is a likely scenario. So what does that mean for strategy? Well, for strategy, Bitcoin ranging, I think strategy can see upside potential, but they're going to need to find a narrative that allows people to have it decouple from Bitcoin. And in my view, while I think strategy is a good long-term hold, I think it's a good long-term hold at like a 1.5 multiple to their net asset value. I don't think they're going to see 10, 15, 20x multiples going forward. And just by function of the Bitcoin holdings, they're going to go up in price if that multiple trends between 1 to 1.5. Right. So that's why I think it's a good long-term hold. And I think it's a good long-term hold because of the options market, as I mentioned, and because of the preferreds. But I just don't know what the catalyst is going to be, if I'm being fully honest. I think that we're going to need to see the market shift and market sentiment shift, and that's going to be the catalyst. There's not going to be any one thing strategy specific that allows it to run.
Mm-hmm. Yeah. All right. Shout out to our listener, Alfredo. Good afternoon to you as well. On the next topic, Sats dumping Sats. So Satsuma is they're Singapore based, but they're listed on the London Stock Exchange. They were one of the first companies this week that Matt from Bitcoin News, I think, informed me as the first one that he knew of that was like starting to sell Bitcoin, at least from like a public treasury perspective. What's your thoughts on that, Adrian? Is this something we're going to see over the next couple months more?
Well, one of the things I've often said is that the law of averages, a few of these companies are going to quote unquote fail or have to start selling Bitcoin. I just think that's, par for the course. I didn't know much. I didn't follow Satsuma very, very much. But I did see the news about them selling Bitcoin. I did see the news about how the market is perceiving it. Do I think that we're going to see more of this in coming months if Bitcoin doesn't cooperate and if these companies don't have a set plan? Yes, I think that's just the nature of the business. Do I think that means anything bad for Bitcoin? No. Do I think that means something in terms of companies needing to reassess what they're doing in terms of treasury management and in terms of what they're going to do for a Bitcoin treasury strategy? Yes. And I think that that's what this is going to, this is what we're seeing now as a result of that. If you were just relying on Bitcoin being number go up and MNAV, you're going to run into it now, is what I think is what's going to happen.
Yeah, so I mean, we saw Saquon sell 970, Satsuma sells 579 Bitcoin, and Naka sold around 375 Bitcoin in order to buy shares in other Bitcoin treasury companies.
Saquon Barkley did?
Saquon? No.
Friday joke. I was trying to throw something in there funny. Didn't do a good job at it.
Yeah,
I'll stick to being quiet over here.
He's got his own.
Are we gonna rip Bitcoiner of the week real quick before we spin the Sat wheel?
Yeah,
Since we're
absolutely.
over, okay.
Yeah.
And I've got about 5-10 more minutes, guys. Just
yeah, you too. I have to hop on something. But Rob, why don't you kick us off for Bitcoiner of the week? We need some sound effects, by the way.
Yes, we do. For my Bitcoiner of the week, then I'm going to keep it on theme with my picks in the draft. I'm going to go Jack Mallers, ringing the bell at the New York Stock Exchange, and really cool image. They donated a Satoshi statue to the New York Stock Exchange. Pretty unbelievable. The fact that Bitcoin has gone from a message post on a message board up to a $2 trillion asset with a statue in the New York Stock Exchange in just the last 16 years. So Jack Mallers was part of that. I mean, of course, 21 with Paulo, they're very close with the artist over in Switzerland in Europe who makes these statues. There's going to be 21 of them around the world. This is number 6. There's one in El Salvador, one in Miami, now one in New York City. We've got the bull and we've got Satoshi. So Jack Mallers donating a Satoshi statue to the New York Stock Exchange. That's my Bitcoiner of the week.
Cool.
Adrian.
I'll go. Go ahead, Adrian. Go around the horn.
For Bitcoin of the week?
Yeah.
I'm going to be boring. I'm just going to say Michael Saylor. He's still doing his thing. He's still fighting a good fight. Apparently, he was cited at JP Morgan just yesterday based on his posts, which I thought
was that confirmed. Was that confirmed, JP Morgan? Because that was he was going to be my Bitcoiner of the week too for the changing off the memes to this.
I thought it could have been more. I thought it was going to be Morgan Stanley, but I put it through a few different AIs and I asked them highly specific questions. And Gemini said it was Morgan Stanley, and then ChatGPT said it was Morgan Stanley. Gemini said it was JP Morgan. ChatGPT told me it could have been Morgan Stanley. A lot of people were using Grok, and Grok was saying that it could be JP Morgan, and some other people used GPT.
I said Lazard. I had Lazard from Gemini. Came up with that one.
The fact of the matter is like let's say it is JPM, or let's say it's not JPM. Let's just say it's a bank.
Yeah.
If he's going to meet banks, the strategy is putting out MSCI notices. Bitwise put out an MSCI notice supporting strategy. He's doing his job for the Bitcoin space, right? He's doing what he needs to do, and I think that knock on wood, eventually his work is going to be rewarded in the coming years. I mean, it already has been, but I think we haven't hit what this is really going to be. So he's doing his part. He's being a good steward. He's being consistent on message. So that's why I would say that given all the MSCI FUD recently and given all of the JP Morgan attacks recently, obviously he's my Bitcoiner of the week.
All right. I was also going to pick Saylor, but I can go with Kelly Hancock from the state of Texas. So this is about 4 days ago. State of Texas officially launched their strategic Bitcoin reserve. Initial investment, $5 million, which is pennies now, it feels like. But I think it was like one of the first states to do so. And you know, it's interesting to see what's happening politically and what's going on, where, you know, Bitcoin should be bipartisan. But we are starting to see some states take these strategic Bitcoin reserves. We saw, was it New Hampshire the other week as well. Now I'm blanking on that news, but it's cool to see some of these states get involved now. And it's, you know, it feels like Bitcoin's been around for 100 years. You know, if you're in the space, just everything moves so quickly. But that is cool to see the state of Texas make a stand and actually like acquire and accumulate Bitcoin for their treasury. So I'll give it to her.
I'll wrap it up. Bitcoin of the week, tying it into the first pick ahead, Strive. I'll go Vivek Ramaswamy. I think if you are on the board, I think if you are a big figure facing the name that's not traditional Bitcoin, if you come out and actually push back against some of these, like the MSCI news, you know, specifically, I think that's very helpful for the industry. And I think it's very good to see people putting their names behind things publicly. So going to put him in there. I want to see other people, other big names that are on the board of either a treasury company or strategy to back them up, right? And to say, hey, this is not, you know, independent MSCI.
Love it. Now, the moment we've all been waiting for, the wheel, right? So if you guys have not gone, now's the moment to go to 21rates.com/stack. All we need is your email, and you can be on the wheel to win some sats. So, Judge, if we need a few minutes, we can play another game here.
Yeah. And I know, Adrian, respectful of your time.
Yeah, if you have to hop, feel free.
I really, really appreciate you joining today. As always, love your takes, opinions, and the education.
Yeah, thank you for having me on. I like what you guys are doing with 21 rates. I like to see I like seeing the growth and the expansion. You guys have been all over the place too at all these different conferences. So keep grinding, keep doing what you're doing, and I'm happy to come on anytime you'll have me.
Yeah, you're the man.
Cheers.
Everyone, give Adrian a follow at Adrian Adrian. So thanks again for coming on, and have a great weekend, dude.
Thanks, guys. Happy Friday.
Yeah.
Cheers.
See ya. All right.
All right, everybody. Thank you so much for being a part of the show. Again, not only do we do this Friday live stream, but we also have a newsletter that accompanies this show. So if you go over to 21rates.com/stack, you can sign up. You can join the newsletter, be a part of this community. We're giving away Bitcoin. We're giving it the newsletter is fun too, right? It's a quick read. It gives you hot takes of all the different news that's happened this week. 3 big stories, 3 hot takes. And you get signed up just by joining over here at 21rates.com/stack. And now's the time. We like to spin a wheel, give away some Bitcoin. We want to foster a community here. Fridays, it's around lunchtime over on the East Coast, morning over on the West Coast. And we're finishing out the week, having some fun, talking about Bitcoin. Want to make this the most entertaining show in Bitcoin. If you have any suggestions, any segments you would like to see, hit us up. Leave a comment, send us a DM, and also guest suggestions. If you have anybody that you think would be great to participate in this live funhouse that we have created for ourselves here over on X, LinkedIn, YouTube, all over the place. We are broadcasting live every Friday.
Yeah. Last thing too, a lot of real estate in that bottom right-hand corner. So if you are at a Bitcoin company, we are keeping it to Bitcoin companies for now. Open to sponsorship. We could really raise the amount that we give away every single Friday. So fun show, little gamification. Friday lunch period. There's no such thing as free money, but there are free sats. Believe that. So Jodes, if we need to keep on talking, we will. That's what me and Rob like to do best. But if you're ready, we are ready for you. But Rob, any other breaking news or any other that didn't make this list that I know the teachers union, I was bringing that up before, they've been fighting back against Bitcoin and close to home because my wife is a teacher. So
what teachers union? in
So I
Jersey?
think I think it's the United States, the not UFT. I gotta find the exact news here, but I believe it was the National Teachers Union. Fact check me if I'm wrong here, but they were fighting back about putting it in their pensions because they thought it was too risky. And when I was on Roxham TV, got to give those guys a shout out as well. I was talking about how it is actually irresponsible to not get Bitcoin, and you are leaking your fiat.
Yes.
So,
well, that's one story. Another one I want to bring up, highlight right now. I'm going to make a video of this after this show right now. But France, the communists, the literal communist party in France is pushing forward an amendment so that all digital asset holders, crypto holders, Bitcoiners in France need to tell the tax service every single year how much Bitcoin they have in self-custody. So it doesn't, like, you're not talking about selling, like reporting a taxable event here. No, you need to tell them how much of Bitcoin you have in cold storage. Absolutely insane. Why? Because one, France is the #1 country in the world for $5 rent attacks, right? There's been 60 attacks on crypto holders in the last year. A third of them have happened in France. Second, this is already a problem in France where tax authorities sell the information of rich people to criminal networks to go get robbed. Twice this has happened in the last year. Tax officials have sold a list to criminals to allow them to be burglared. And I mean, people have had their fingers chopped off in France in the last year for their crypto.
That's crazy.
Yeah, why are they doing that?
Why? To pressure them to give up their seed phrase.
Well, yeah, one of that, but like, why?
The government, he's asking. Yeah.
So that's a question, right? Gold holders don't need to report how much gold they have. Fine art holders don't need to report how much fine art they have, but they want Bitcoiners to say how much they have in cold storage. It's absolutely insane. They've come up with some pretty wild attempts to try to get around this with civil disobedience. The co-founder of Ledger is saying that they should make a shitcoin and that everybody should buy one. And then they're going to have a smart contract or something to pump the value to $1 billion on December 31st each year so that everybody can report that they have over $1 billion worth of crypto and just flood the system with garbage data. And then everybody looks like a billionaire on paper. So the robbers don't know who to go after. But really crazy. I mean, France is broke, right? There's protests happening every single week. There's restaurants on fire. There's farmers spraying manure all over the streets of Paris. Like literally that just happened today. That's one of their favorite things to do. Yeah. So, I mean, France seems like a basket case, but they want to know how much Bitcoin you have in cold storage. So be careful out there, French Bitcoiners. I'm sure
that's crazy.
Yeah.
Other big news, though, CFTC allowing Bitcoin as collateral. Bank of America launched Bitcoin-backed credit. I mean, those are two big stories, along with the three that we mentioned last week as well. So Vanguard, it's wild to me that the price is still not moving up like crazy with all of this positive news, but it's one of those things where it's just like, the longer it coils. If you watch like Tesla or Amazon stock, the longer it coils, the bigger I think Kathy Wood was famous for saying that the longer the coil, the bigger the spike up. So we shall see.
We're laying the infrastructure foundation, right, for the next wave. 2025 was defined really by these treasury companies, and it seems like 26 or whenever we move up substantially next will be because TradFi's here and they're allowing all their customers with, of course, trillions of dollars worth of assets to buy in an easy way that's approved, that's recommended by financial advisors from Bank of America, from Morgan Stanley. The fact that they weren't allowed to mention Bitcoin before, and now they're actually going to be able to actively promote it to their clients it's a game changer. Bitcoin has entered the mainstream, that is for sure. So crazy to see, and it's just a matter of time.
Yeah. And 5 banks, OCC conditionally approves First National Digital Currency Bank, Ripple National Trust Bank, BitGo Bank and Trust, Fidelity Digital Assets, and Paxos are now new entrants into the federal banking sector. So that's pretty exciting.
That's big. All right, so we have a winner this week who actually signed up via Twitter, so I don't have your name, which is fine. But it is a non-12 is the winner. we are going to figure out. We'll capture some names so we have something fun to say, maybe a little picture. But 21,000 sats. I think next week, let's just run it all day. I think we should let our listeners have more time. We'll run a little here. We'll give you all the codes you need, and more people get sats. Maybe we do two winners.
Yeah, I was gonna say throughout the show we should start giving away some sats.
Yeah.
So give us feedback. You got several thousand here today. So thank you guys for tuning in on a Friday. I'm sure you guys have a lot of things you could be doing, but you're here with us, so appreciate that. Give both of us a follow for more updates. We just actually dropped our Adam Back interview today, so that was exciting. So at 21 Rates HQ, you can check that out. And I'm trying to think of anything else that we missed here, but yeah. Feedback. Yeah. Give us feedback. We're building this with you guys. This is the pod of the people, as they say. And so truly shoot us either 21 Rates or Bitcoin News. We're all friends here, so we'll share the information, but you guys got feedback of how we can make this better. What we can do to improve, always want to do so. So thanks again. We got one more comment here. Hello from Brazil. Let's go. We're going international, baby. The Friday stack is here to stay. So thanks, everyone. Have a great weekend. Anything else, Rob, Jody, before we head out? All right.
Go to 21race.com/stack. Sign up for the newsletter. Be a part of the system. We're giving out sats on a weekly basis. Become part of this community. We're going to just continue to build this. We want to make the most fun show in Bitcoin. This thing is there are no limits for this show. We are on a mission in 2026 to redefine Bitcoin content, and we are here to do it live in front of you. So thank you so much for everybody for tuning in. This has been an awesome time. Adrian just dropping knowledge bombs left and right, and learn something, earn something, have a good time. Thank you, everybody.
See you guys.